Oh, S&P, why you like torturing us so much? Why would you do such things second day in a row? What a corrective fluff. Here's the reason why. This is institutional chart. Every single time I work with institutions, this is my favorite chart, weekly. Chart present in front of you for years. Every single one of these levels, proprietary level, I developed in 2008 and taught to traders from beginner to hedge fund trader in US and abroad. Bullish rally currently exhausted. Bullish rally currently at exhaustion levels. If you ever ran marathon, you know what it feels like. This is mile 22. If you haven't run marathon, I highly encourage you, please do. Because market just like human. This is massive correction on weekly. What you're witnessing on junky 1-minute chart that we only use in the course as a barometer chart, never as a trade chart. In massive correction, this is broker's heaven. You cannot short, you cannot buy this market. This is what market does 40% of the time. Holiday market conditions 80% of the time. This is what market did yesterday. And this is where market reminded you. You do not have to babysit and stare. Price comes to reversal zone, you know the rules, you take a trade. This is what happened weeks before, as this is day trading retail trader chart. Every single level proprietary, but at exact same crucial reversal zone as you're witnessing on hourly chart that had been in a play on April 3rd, on April 4th, had been in a play in my absence, had been in a play yesterday, in a play right now. The problem, however, remains. This is crucial Fibonacci resistance. This is what's causing a problem. Identical level, identical strategy as on weekly, except on weekly we're sitting very, very close to institutional support. Except on weekly you understand that the only thing I'm listening to institutions complain, difficulty getting in and getting out of position. We're stuck completely. And the biggest problem that's causing to us this morning is not weekly chart. It's this chart. Daily. Boom. This is a dance. Levels present in front of you since last year. As I say to you, the only good thing will happen if we will break through this level lower. This was flawless market. If you browse my blog, if you browse YouTube channel, what was happening last week in March? What happened finally yesterday, as I've been warning you? I need market lower. As I've been warning you this morning, cannot buy near this level, cannot short near this level. That's what we're dealing with this morning. And that's the dance price does on Apple, on Euro, on gold, on any instrument. Price just like human. The worst place for the day trader to be? Exhausted bullish rallies, exhausted bearish collapses. Institutions on vacation. This is broker's heaven. How to trade these levels, you must know the rules. So what will oil do? Let's take a look. As oil news in 20 minutes. Take a look, ladies and gentlemen, where oil is. This is retail levels. This is the levels present in front of you for last week. Is this a powerful reminder? Oil at reversal zone. As a day trader, this was your last chance to acquire position. As you understand, these proprietary Fibonacci levels show you with 85% chance of complete collapse. You never acquire position at reversal zone. You're monitoring for reversal. And if you understand that institutions are currently at this level, boom, my goodness, it's not just little retail chart, this is institutional reversal zone. Look what oil been doing here for months. No surprise. We absolutely expected this. As I've been showing you this level for months, never get tempted to buy near. Not an option. As I've been showing you for years, this is oil weekly. My favorite chart of all times. Buy at trend inception. Do not buy near hot pink line. Hot pink line is always present. Oil been dancing between this support and this resistance. We're not far off. You buying near as a day trader? Name of the game is ouch. As institutions need to scale in and scale out of position. You buying near reversal zone? Name of the game is ouch. The only option you have is to short this market, only if rules are met. We're only respecting news due to volatility, as Fibonacci is the only predictive tool in the market, the only mathematical sequence that you can see in everything that surrounds us. As we discussed for months and weeks, price comes to this level, your only option, your only bias is bearish. I don't care if the news is extremely bullish. News is soap opera. News is to be respected only due to volatility. As Fibonacci is the only predictive, natural, mathematical sequence in the market. And that's the reason I named this level reversal zone. You ever buy near this level, success is not possible. Did you get excited that Tesla has higher market shares than GM? Who cares? Tesla at reversal zone you do not buy. That's the reason why Tesla in massive bearish correction. Your last chance to buy Tesla was here, not here. Reversal zone never to be ignored. News to be respected only due to volatility. If news and indicators worked, everyone would have been Bill Gates. The only thing that works, the only thing that indicators build after, is price action. Indicators are fake, artificial delayed tools. The only thing that's accurate, natural mathematical sequence, Fibonacci. I will convert this hourly chart to 1 minute chart. When price will collapse to this level, this will be crucial Fibonacci support. Hot pink line, never to be ignored. Exact same line we've been witnessing and monitoring on euro for the last 2 years. Exact same strategy. None of us knew that euro will respect this level for 2 years. None of us knew that pound would break through this level because of Brexit, as pound already at 119. What oil will do at this level is crucial this morning. Bias here is bullish, but only if rules are met. Oil in pain. Oil can dance and chop from here to here. As remember, institutional resistance is this level. As what you must remember, you must allow wiggle room when it comes to institutional levels, as institutions have very different issues. They must scale in and scale out of position. As S&P reminding you, are you trading correction? Look at that dance. Look at what price been doing. Testing your knowledge. As price reminding you, the most important part in your trading when not to trade. This is how brokers print money, when trader participates in this. If you have a short near institutional support, your success rate less than 15%. This support been identified years in advance. I would love for this support to be broken. You as a day trader cannot short near. So, dance is on, S&P is waiting for the news. And this junky barometer chart reminding you, the only way success is possible if you obey viable strategy rules. Any strategy that's viable should apply to any instrument and any time frame, because price action is the same everywhere. If I remove the name from this chart, you wouldn't have a clue. If it's Apple, if it's oil, if it's euro. Price the same everywhere. Remember that. You learn how to trade price action. You learn how to trade Fibonacci. All you have to do is identify what you want to trade. S&P in massive correction. On 1 minute chart, on 5 minute chart, on 7 minute chart, on 11 minute chart. What chart to trade? You must know. It's never 1 minute, ever. It's junky little chart that we love only as barometer chart, only as a trail chart, never as a trade chart. All expectations 0, ME flat. Anything above is negative, anything below is positive. Reminder, oil unlike any other news. Numbers above, bearish news, oversupply. Numbers below, bullish news, undersupply. So look at that chart, look at that dance. We've been here for an hour. It doesn't matter if it's S&P, it doesn't matter if it's NASDAQ. Which knowledgeable day trader never trades? You become a day trading volunteer if you're trading NASDAQ. You must understand the counting of day trading, which is the key. Market in pain, market waiting for oil news. Oil news at any moment. Ladies and gentlemen, news on oil extremely bullish. We have a spectacular undersupply on oil. Let's see what oil will do next. I will continue bringing up this chart to you. As you remember, we identified that this is extremely dangerous area. We identified if oil will crawl up a little bit higher, this is a very big problem area. Institutional resistance, 55. We're not far off. When it comes to retail trader levels, if you're acquiring position this late, it's a very big problem area. I expect very chaotic moves on oil, back and forth. Is it possible that bullish news does not mean a thing? Is it possible? I warned you, we are at reversal zone. Endless fake outs, back and forth on oil. You buying randomly on the news? You dream about the markets. If news meant something, everyone would have been Bill Gates. Remember that. Doesn't mean a thing. Reversal zone is present. You expect reversal. You do not acquire long. That's the reason I named this proprietary Fibonacci level. You learn in the course how to install on your platform, on the instrument of your choice. What you trade, absolutely up to you. It is not a software. It is a mathematical sequence. It is a mathematical tool. As S&P remains in pain, testing your knowledge. Phenomenal bullish news on oil, and oil is down 50 ticks. We'll take a look how much more down oil will go. When you're dealing with institutional resistance, you do not buy in year. Institutional resistance identified years in advance on very, very important weekly chart. Never to be ignored. Never buy near. Hot pink line is always present. Bullish news does not mean a thing. Bullish rally overextended and you ever near this level as a day trader? You know extremely well. Buying near this level never an option. You remember extremely well what happened on Apple at the time of horrific fundamentals. Worst news on Apple in 13 years, and Apple is rallying. And I say my bias is bullish, as posted everywhere. Spectacular news on Apple right now does not mean a thing. Exact same strategy as on S&P, as on oil. That's exactly what played out yesterday. 2 hours of exact same fluff and then flawless bullish rallies. Multiple trades. And where did this bullish rally end it? Is it happens to be at that hot pink level that's been in the room for weeks on your day trading chart? How did we know? The best thing that S&P can do is push a little lower. Finally happening. So here's Australian dollar and here's picture perfect reminder. Price comes to reversal zone. You know the rules. You monitor for reversal. Australian dollar 2011 2012. Ouch. Hot pink line is out. Market went into free fall. What in the world is happening right now with Australian dollar? What is Australian dollar doing now? Ladies and gentlemen, AUDUSD currently at reversal zone. Doing exact same thing as S&P had done this last 2 weeks. However, very poor Australian dollar on monthly struggling to break through this Fibonacci resistance. What a dance. That's your channel on monthly if you choose to invest long term. Identical formula to what you use on S&P. And that's the chart that's been present in front of you for weeks. What chart you trade is your choice. Perhaps we should not leave and perhaps we should remember. Exact same decision point 2 you saw on Australian dollar is what been an obstacle this morning. With what was an obstacle yesterday morning. Will we see the bullish rally? Will remember how important that level was? Let's stick around and let's see if S&P will do what Aussie had done. So traders, here we are on oil news. Spectacular bullish news on oil did not mean a thing. Any trader who had taken at least one class knows exactly what's happening on oil right now is the most important rule in a play in front of you on oil. Most powerful reminder. If you ever choose to acquire position at reversal zone, success is not possible. This is exactly the reason I named this level reversal zone. It doesn't matter what the news is. If news meant something, everyone would have been Bill Gates. Spectacular bullish news on oil and oil collapsing an hour later, 50 points. Ladies and gentlemen, if you have any questions, never hesitate to contact me. Otherwise, we are out, we are off to class. Market remains in pain. The information can be found under Contact Us page. Webinar later today. Class is ongoing. If you would like to join us, I highly encourage you to review the information on the website and never hesitate to contact me. Thank you.